Good afternoon, everyone. Thank you for joining the session. I think it's running a little bit close to lunch, but hopefully in the next 15 to 20 minutes, we can share a little bit with you about the outlook that we have for Japan. As mentioned, today we have Yasuo Kono, who's a senior product specialist at Nikko Asset Management. Let me start first with a quick introduction to who we are. With $240 billion under management as at 31st of March, Nikko Asset Management is one of Asia's largest asset managers, providing high conviction active fund management across a range of equity, fixed income, and multi-asset strategies. Headquartered in Asia since 1959, we have subsidiaries, over 200 investment professionals located in 10 countries around the world. Our headquarters is in Tokyo, and we are one of Asia's top 5 asset managers in Japan. And as you can see from this particular slide, about 50% of our AUM is actually in Japan equities. So with that background, let's talk a little bit about Japan and the resurgence of Japan, as we have put in the title of this particular presentation. And in the last 1.5 years, I think we've seen that the Japan market has done really well. In fact, just on Thursday, it closed our intraday high. Markets have really been driven by a combination of factors, including things like economic policy, corporate reform, structural reforms, focusing on increasing corporate governance, increasing shareholder returns. But let's start a bit first by talking about Japanese culture, about the behavior of Japanese people, and the impact that it has on investing. So maybe could you share a little bit with us about that? Thank you.
Yeah, thank you again. I'm Yasuo Kono, relocated from Japan 5 years ago. So I'm almost 50 years old, actually. And let me start with this. The characteristic of Japanese, because this is very important to understand Japanese economy, companies, and behavior of the consumers. And that explains why Japan lost decades after the 1990s, that's even before I started my career, actually. And this also explains why Japan is now that's changing. So there are a variety of the characteristics. It's not my observation, but based on the survey, especially for the foreigners. And I want to discuss which one is right and wrong, but broadly speaking, I agree with most of them. So you see a lot of the characteristics, but the key for the investment is the 3 things in the center of the slide. So let me address it quickly. Long-term oriented, this is true particularly about corporate management. Japanese companies, especially the traditional large-scale company, they have the long-term growth plan and also the medium-term plan that always announced. Not really focused on the short-term oriented growth strategy. So that means we need to be patient sometimes, and Japanese, even the equity market move very slowly, but the things is changing. So that brings the investment opportunity, that's one. And the second one is the status quo, no changes. So you may agree with that. So Japanese doesn't really like changes. So we see the darker spot, so change happen, but negative impact happen to me. That's the nature of the Japanese. So they tend to keep the status quo, but that doesn't mean they don't change anything. They change, but very slowly. That also explains why Japan lost decades, but now it's changing. I explain more detail later on. And risk aversion, that's about the corporates. Japanese company is relatively risk aversion. That's also what I agree with. So they didn't invest much into the new growing area, but they tend to stick to protect their own business. So that also delay the changes, but it's also the changes are changing now. So let's move on to the next slide. As a result, what happened in the last 10 years is this. For Japanese company, they grew their profit by 60% plus in the last 10 years. For annual basis, that's 5% plus, so not high growth like the United States or Asian country. You heard of that earlier, but they very slowly growing. But they didn't spend this profit into the next growth, but they just accumulated as a cash on their balance sheet. So 6% growth of the earnings, and cash also grew up by 60%. So the key in the future is how they will use this cash for the future growth. So that's explain how Japan will be recovering in the future.
Yeah, so to summarize, one of the main reasons for the last decade is very much the culture, the characteristics of Japanese people staying with status quo. And as a result of that, we've seen the accumulation of 3.2 trillion in cash that they are holding. One interesting fact about wages in Japan is that, since the 1990s, the average wage growth in Japan has remained around 0% per annum. I mean, think about it. For the last 20, 30 years, if you had no increment in your wages at all, that's actually the situation that's been happening in Japan. So do we see wages increasing in Japan now?
Yes. Okay, could you, yes. So yes, finally, we started to see the wage growth in the last 3 years, particularly the last 12 months. So we see the darker green line. This shows the average wage growth in Japan. We see the acceleration happen in the last 3 years. And the reason behind that is the workers' behavior. That's slowly changing. So you may or may not, for Japanese tend to work for the single company until the retirement. That's called lifetime employment, especially at large-scale traditional company like Toyota or Mitsui, something like that. So that means the company did not have to raise wages because their employees stay at the company. So even when the tight labor market, they didn't need to raise wages because they are, especially the mid to the senior people, they tend to stay at the company, so they don't have to replace these people, even when the unemployment rate is very low by historical standard. So that's the last 10 years. But the people started to seek the job changes, especially after the COVID. So the lighter green line, that's showing how many workers seek job changes. There is such statistics in Japan, that's from the Japanese government. So more people are now looking for the job changes. That probably because they also started working from home after the COVID. So they work alone at home and of course communicate with their bosses or co-worker, but they started to think about, okay, I may want to change job because certainly that could bring the higher wages salary if you change job. So that's happening on the ground. So the slow but the underlying changes of the behavior it finally boosted the wage growth because the company is now feeling the pressure to raise wages. Otherwise, they lose the good talents and harder to maintain the business. So that's the key changes in the last 3 years.
Yeah, and as we see wages increasing, people have more money to spend, and that definitely helps to boost the economy as well. When it comes to Japanese companies, I mean, here in Singapore, we are familiar with quite a lot of Japanese companies, right? But these names that we're familiar with, in the past, they probably developed some interesting, innovative technologies. But nowadays, these companies may not be seen as so exciting or such high growth companies. Could you share with us an example of a company that has actually managed to leverage their existing technology, but move into a growth area instead?
So again, we heard about the United States technology like Google earlier session. Japan technology is very different. So Japanese is more oriented for the manufacturing business, and they originally developed a lot of the good technology in the last decades. But world is changing, so their business shrunk in the last the few years or could be decades because the demand for the product also changing. So let me show the example of how they changed the business model using the original technology. This is the Fujifilm, so that's probably familiar name here in Singapore too. The Fujifilm originally used to be the film company, so very low-tech, the old technology company. And demand for the film shrunk because we now have the smartphone to take photos, so we don't need the film anymore. So Fujifilm needed to change their business to continue to grow. So what they did in the past is they used that technology for film and apply to other growing areas. This is the life science business. So technology for film can be used for, let's say, the X-ray. That's obviously the same technology, similar technology, but needed to be innovated. And MRI, that's also the area Fujifilm is growing. And even the biotechnology, there is a common technology used for the such business from the transformed from the film business too. So many companies have such good technology, but it's obsoleted. But several companies successfully transformed their business model to the growing area, and this is where our portfolio manager also focusing on, and our funds are currently the holding, such like the Fujifilm or even the Nintendo or the Hitachi as well.
Yeah, that's really interesting. So now when I see Fujifilm, I won't think of the film, but rather the company is actually doing life sciences. Earlier, we did speak about how Japanese companies are holding a lot of cash. And obviously, one of the things that they can do is pay higher wages to their employees. Besides increasing wages, what else can companies in Japan do with the $3 trillion cash that they're holding on their balance sheet?
Yes. So backing to the question how to use the cash in the future for the growth or the shareholder return. So the Tokyo Stock Exchange started to ask the listed company to plan how they use the cash in the future. That started last March the last year, and many companies finally disclose their long-term plan, how to use cash. Two ways to use. And one is increasing dividends or the share buyback that directly boost the share prices. And other one, although it has not been well discussed yet, but we will see that, is they use the cash to invest and grow the earnings, like Fujifilm. So again, a lot of the company have their original technology or intellectual property, but they didn't use that for investing in cash and transform their business or even explore the other new area and continue to grow. That is now happening on the ground.
So with how the Japan markets have actually hit historical highs, one of the questions that's on a lot of investors' minds are, have we missed the boat? Or in this case, have we missed the Shinkansen? Can you share your views, please?
Yes. So it's that question comes to the valuation. This is the most common one, the price to earnings ratios and historical series. And yes, I also have been receiving such question on the valuation in the last the few months. But currently, the PE ratio for price to earnings ratio of the TOPIX, the Japan equity market, is still just around the historical average after the global financial crisis that happened in 2008. But we need to have the bigger picture because Japan is now getting out of the lost decades. In the last 14 years, it is low growth, low inflation, no wage growth environment, so that's different. So when more investors are confident on the Japan growth, the sustainable recovery, valuation should be higher than in the past. So just a reference point, you see on the left, the 2003 to 7. So there is a higher the price earnings ratio at that time. So there is still room to run, but we need to see more the confidence from the equity investor in the market.
Great. That's great to know that maybe we haven't quite missed the boat so far. So I'm just going to quickly run through two of the strategies that we wanted to feature today. Firstly, starting with the Nikko AM Japan Dividend Equity Fund. This is a fund that aims to maximize total returns via capital gains and dividend income. The team is looking to select high dividend stocks, focusing not just on current dividend yields, but also on future dividend growth as well as sustainability. And this is made up of a portfolio of about 50 stocks. The distribution policy for this fund is to make monthly distributions of approximately 5 to 7% per annum. The other fund that we would like to feature today is the Nikko AM Japan Value Fund. And this strategy aims to seek returns by identifying undervalued companies that are expected to undergo structural reform. And one of the companies that actually is one of the stocks in this holding is, as mentioned by Yasuo just now, Fujifilm is an example of one of the companies identified by the manager as a stock for this particular fund. So just to summarize, why Japan equity now? We are really seeing changing behaviors of workers and corporates, and this is expected to drive the revival of Japan. We're seeing wage growth. This is triggered by job changes, and ultimately this will help to increase consumption, as well as the fact that a lot of corporates are using the technology they have to be able to leverage and get into more higher growth businesses. And these 3 points, I think you would agree, are more longer term trends, not just short term trends. And also, as mentioned earlier, valuations are still reasonable. So, and to round off, why Nikko AM? These funds are managed by our fund managers who are veterans in the business, focus on Japan equity, and they've been doing it for over 30 years. The investment team is made up of portfolio managers who have in-depth knowledge of these companies and are on regular contact with company management. And the last point here to highlight, for the Nikko AM Japan Dividend Equity Fund, there has been dividend distribution, as I mentioned earlier, 5 to 7%, and this has a track record going all the way back to July 2014. So before we end off, maybe I'll just let Yas make a few remarks, and then we can end this session. Over to you.
So the investment timing is always important. And I actually saw the sign of the Japan changes in around 2015 and after. So on the ground, the company finally started to discuss how to use the cash and how to retain the good talent. So that's happening actually on the ground. But growth was not materialized yet. So I waited for something really happen. And now in the last 12 months, we finally started to see the wage growth acceleration, and also the corporate governance, the reform that the pressured by coming from the Tokyo Stock Exchange. So now I'm more confident than in the past on Japan equity. So I hope you grabbed some key points from here.
Thank you for your time. And we have a booth outside, so if you have any questions, please feel free to look for us there. Thank you very much.
Thank you very much.